Things are heating up for Bitcoin behind the scenes, and it's very interesting because on the surface, it doesn't actually look like much is going on, right? The best I can give you is that on a short-term time frame, Bitcoin is topped out at $30,000, and now with a triple top, and now we've set a triple top at 29,000 as well, which is definitely quite concerning because what we're seeing is like, okay, fair enough, $30,000 up here, I expect Bitcoin to struggle there. That's a pretty strong area of resistance, but 29K, you know, if we're struggling at areas that shouldn't really be a problem, that could be a really scary sign. But what I've also been telling you over these last few videos is that these kind of little swings on the micro time frames aren't so important. The most important thing we're doing, and I discussed this with you in my previous video, if you're subscribed you will have seen that, is that Bitcoin is now gearing up to form its consolidation pattern within the big fractal that could take it up to $180,000 if we did what we did last time. Obviously, I don't think we're going to be doing that, but it's still really promising and we're still following all of those steps. So that is really cool, and we're doing it on a day where the S&P 500 is down, right? We know that this is important. If the S&P 500 is strong, Bitcoin can typically be quite strong as well. You know, and right now we're seeing the S&P 500 show a little bit of weakness, right? And I'll get back to this in just a second. But what's really interesting is that Bitcoin isn't struggling anywhere near as much as the S&P 500 right now, right? We're still really very comfortably within our support range, and that is a really good sign. At the same time, gold continuing to rally up. Guys, what's really cool about this, and I can't continue the video without speaking about it, is that when you use my link to BingX in the description down below, you're going to have access to these markets that I just described, and that includes Bitcoin obviously, but also you're getting access to the S&P 500, you're getting access to Germany's DAX, for example, the UK's FTSE 100, commodities, gold, oil, silver, but also stocks. You're getting access to all of these markets without KYC. The reason I'm bringing this up, guys, is that Bybit's mandatory KYC goes into effect within literally like less than 5 days from now, and if you're not prepared to do that, if you don't want to do that for any reason, you need a good solid alternative. The thing about these guys, and the reason that I'm using them, is because they've demonstrated one-to-one reserves. They've got amazing bonuses, over $5,000 in bonuses you're going to get when you sign up using my link in the description. There's access to all these markets because look, I like having options. You guys know the deal. I have a lot of different accounts on a lot of different exchanges, and for years I've been telling you that that's the right thing to do because it's safe and you get to spread out your risk. If one exchange goes down or has a problem, you're not going to be particularly negatively affected by it. But at the same time, I wanted to choose an exchange where I don't really have to move around if I don't want to, you know, and that's why BingX is compelling. Having access to all of these markets gives me everything I want to trade anyway, all with a Bitcoin deposit and with the privacy of not even having to fill in any KYC. It is well worth checking out, and you can sign up to it using my link in the description. This is where I'm going to be. I'm going to continue to use Bybit, but I love having options, and that's why I'm really interested in BingX. I'll talk to you a little bit more about it later on, but check it out with the link in the description. You have to do this within the next few days if you want to keep trading and you're on Bybit, if the KYC news affects you. But here we are back to, okay, sorry, I want to make this very clear. You can use many other exchanges. It's not just BingX. There's a lot of other exchanges that don't require KYC, but obviously you want to make sure that you're choosing a credible one. And you know, if you know, I'm super safe with where I put my money, which is why if I would trust BingX with it, you know, then that should go some way to demonstrate to you that I take them seriously. I think that they're worth checking out. You know, at least to test out, right? This is a time where you can test out a bunch of different exchanges. I want to bring your attention back to Bitcoin here, though, and actually something much more interesting than the short-term time frame. It's what we were doing with our rallies. Now, this is quite an interesting chart, and I want to break down why that is for you. Right here, what we're looking at, I'm sorry, I'm going a bit fast here. What we're looking at here is basically the uptrends that Bitcoin has enjoyed over the last like 3-4 years, right? Going back to 2019, we're just kind of looking at the gradient of the big moves that we had, or of some of the big moves, because I've left this one out, for example, and I've left this one out, which isn't particularly big. And what we can see is that each of these moves up that Bitcoin is making are actually quite similar. You know, generally speaking, the slope that we are rising up with our price is quite similar, and that's interesting because it's a demonstration of how, you know, our rallies in this market have moved in similar ways. But where this gets really quite striking is if we just look at this rally here and this rally here, what I've gone ahead and done is I've drawn a Fibonacci retracement on these rallies, you know, and I wanted to see, with the market kind of kicking off its bull right up to the top, are we retracing back down to the 618? retracement a lot of the time? And the answer here was yes. We fell right back down to the 0.618 Fibonacci retracement. Now I want to show you what this actually looks like. I want to draw it in front of you on this chart, just so that we understand and we're all on the same page here, because this can get a little bit confusing. If you don't know what the Fibonacci retracement tool is, if you're not super familiar with it or how to use it, I've got tutorials on how I use all of these tools inside of the Forflies Academy course, which you guys are going to get for free when you sign up for VIP. Most of you will get it for free when you sign up. And this is just the theory of absolutely everything I know from A to Z about trading, analysis, psychology, and so on. You're getting all of that theory in the course, but when you're getting it side by side with VIP, you also get to see how I implement those strategies as well. So it's a really very powerful offer there, well worth checking out. But here's what I actually want to do for you is draw out that Fibonacci, and by the way, if you do want to join, then the steps were on that previous screen. And I just want to kind of draw out that Fibonacci at the time that the market kind of really started to rally up. Let me actually see how it's been drawn on this chart, because I'm doing it a little bit incorrectly now. We're going to draw it down to this low. This is a roundabout where I can draw it down to. We're roughly getting the same image here, and what we're seeing is that we're falling down to that 618 retracement, and then we're kicking off a really big rally. It's a lot more obvious here. We're kicking off a really big rally here that ends up taking another big leg up, but also just showing you the importance of the level. And where this gets even more interesting is at the very next rally here, if we measure our Fibonacci from this low up to this high, so just basically where things get crazy. This is what I use the Fibonacci for, right? Is like, and there's a lot of different ways to use the Fibonacci tools. There's not really like one particular way to use it correctly, but what I find really useful is to just kind of look at like where things really started to kick off, where things really started to get quite crazy. So again, if I kind of draw that fib off this level, super clear, that 618 level is exactly where the market is coming back down to capture a bit of support and then continue to rally up, which has been a key characteristic of these first two kind of bullish markets that we've had. But if we go forward, it's the same picture here. There's another 618 retracement here with this rally from our absolute low to our absolute top. 618 retracement is where the market finds some major support and continues to rally up, and it's the same case here most recently. This is all really impressive, because at the same time that all of this is happening, we're seeing a good level of involvement from our Ichimoku clouds. There's some Ichimoku involvement here. Okay, that's nothing crazy, but there's some Ichimoku involvement here. This completely changes the game for the market. It's one of the big things that helps Bitcoin continue to rally up, which I think is a very compelling picture that it's starting to paint there. Over here, we've got a one-day Ichimoku cloud opening up right when the market starts to rally up. That is no surprise. And right here, we fall into the cloud again. Guys, if there was ever an overpowered indicator that needs to be patched, which is too fucking powerful and too useful, it is the Ichimoku cloud. But anyway, I rest my case. This is the best thing that's ever come for free that I've ever encountered. It's definitely the thing I've used in my life to make the most money, which was a free product, right? It's the most free product I've ever used to make the most money, which is very cool. And I wanted to show you what's happened after these pumps. Now we're sticking to these very long-term charts where everything's already drawn out, and on this occasion here we saw 72% drop, right? This was the first big rally that I showed you right here. On this occasion we saw 72% drop. The next one we saw 420% rally. The next time it was a 78% drop. So we're kind of in line here. If we're looking at a similar level of a drop, we're looking at $8,000. This is not what I want to point your attention to. I just put it on the chart because it's just good to do. The main thing I want to focus on is this high. If we're following a pattern of alternating, we could be ready to set a new high. This is completely unscientific analysis, but what we had last time was in all honesty, a fairly aggressive, from 3,800 up to 10K, a fairly aggressive, rally here, 3 times gain basically, leading into a massive uptrend right here. And even if we're not looking at anything crazy like this, the thing that I've been getting across to you guys in all of these videos is that the setup this chart is painting right now is one of the market continuing to break higher. There's so many ways that it can happen, where this market is basically in, and it's so typical for Bitcoin, right? I've covered the characteristics with you guys a million times on this YouTube channel. It's so normal for Bitcoin to form this kind of pattern where we kind of, you already know what I'm about to say. We rally up quickly, and then we rally up slowly, and then we usually rally up again. On this occasion here, we didn't rally up immediately, we took the scenic route. But the end result was the same. We just deviated before continuing to rally up. It's the same thing that I said would usually happen when Bitcoin enters these patterns. We just captured some liquidity down here first. It only took a few days, and then Bitcoin did what it was originally poised to do. And we're basically in the same pattern again. Now, does that mean we can't grab liquidity first and then do this? Of course not. We could definitely do something like that. But the setups here are very compelling. We have to look at this within the scope of the S&P 500, obviously. And the thing with this chart right now is if we're able to keep finding support here at 4050, 4050, this is going to turn the S&P 500 into basically being in a bit of a sideways consolidation pattern, which is basically, again, just another form of correction, right? We rallied up pretty strongly here from low to high. It was a beautiful 11% rally. It happened across the course of just over a month, so it was fairly quick for the S&P 500 for its standards. And so we saw, a fairly sharp correction, right? I mean, it took about a month to drop down by 9%. So we didn't lose all of the gains, but we definitely lost most of them. It was a deep correction. Clearly, the market needs to correct quite a bit, so that is something to pay attention to. But what we have right here is now we're just entering another correction. But this is time-based. We're just trading sideways. We're stretched between, quite a narrow range, to be honest, about a 3% range, and we've been here for about a month, right? So we could very well continue this. I think it honestly is just going to almost mimic what happens with the dollar, right? If the dollar collapses beneath this floor, then yeah, we're probably going to be looking at, a big increase for the S&P 500, right? That's generally just how it's gone. Now, I haven't seen the interest rate news today. I don't care. It doesn't matter. I'll take a look at it when I actually start looking for that information. I don't need to analyze that stuff in order to tell you guys what I'm seeing with the chart, because the end result is that we're still in the same correctional pattern that the S&P 500 was in already. Nothing changes. This is still a bullish setup. We're still coming off a low. We're still attacking our highs. We're still consolidating at our highs. We're showing the right signs. Gold rallying up right while I speak to you guys. I've been warning you guys about this happening so much over the last weeks and months, and it's so beautiful to see that finally happening. And I think it's, again, one of the big reasons that even though the S&P 500 could be dragging things down for Bitcoin a little bit in terms of people being, if they're losing money with the S&P 500, they don't want to take on additional risk. Even though that's happening, I think one of the reasons Bitcoin is able to hold its ground fairly well right now is because of what's happening with gold. So this is a very compelling picture as well. At the same time, altcoins are still there as well. There's just so much going on here that, of course, I've had to make the whole second YouTube channel to talk about it, which you can find by following the links in the description down below. The very top link will take you into this Forflies daily YouTube channel where I give you all of my analysis on altcoins. But this link down here for BingX will give you over $5,000 in bonuses, and you can trade all of these markets I've been discussing with you completely free without KYC. That is really, really cool to be able to access. I'm sorry, not quite completely free, but you have got competitive fees. And again, what makes this market really important, what makes BingX really special is the fact that you have access to stocks. You have access to Tesla, Apple, Amazon. These are actual things, trading pairs that you can trade with a Bitcoin deposit without KYC. It is bloody crazy. You have access to all of these markets to trade with. You've got Forex if that's your thing as well. Indices, just easy markets to trade. Again, guys, the reason that I was saying this is such a big deal and so useful as an upgrade after Bybit, if you're interested in moving away because of the KYC mandate in less than 5 days, is because sometimes these crypto markets become really stale, really boring, really dangerous to trade. But traditional finance doesn't. Indices stay very tradable. Stocks stay very tradable. Commodities stay very tradable. So if you have the option to trade those things, these markets that, quite frankly, move in much more realistic, easy to analyze ways than Bitcoin, well, you've got that option in a really convenient place. So this is well worth checking out if you're interested in an alternative. And with the bonuses available, if you just sign up and get your bonuses, you obviously don't need to trade anything now. You will have it ready to go when the volatility returns to Bitcoin. What you don't want to do, and a lot of people make this mistake, is you don't want that KYC thing to be introduced, and then 2 days later there's a trading event that you want to participate in, but you weren't prepared enough to take advantage of it. Signing up takes 20 seconds. It's well worth checking out. And of course, if you're not worried about the KYC, then Bybit is still a phenomenal option. It's the best option, and I'm going to continue to use it myself. But quite frankly, Bybit doesn't have access to these other markets that BingX does, and that's why it's a very compelling option, even if you don't even wanna, you don't even have a problem with KYC. Just the fact that you have access to these is very, very cool. Again, from what I'm seeing with Bitcoin, we're still in the same range. We're still range bound. Nothing has changed. If anything, we're continuing to follow and develop that fractal. I don't want to put too much faith in the fractal. I am talking about it, making exclusive videos on it, but you can clearly see that it's not the backbone of my analysis. It's there. I hope it works out. I definitely think that it has the potential to work out. Perhaps not as aggressively as before, but even if it gives us a $5,000-$10,000 move, that's enough, right? It doesn't have to be, a 6 times increase like last time. If we end up pulling something like that off, it will take us deeper into the 30K range. For me, 38K is going to be the key level to break. Really, unfortunately, until we get there, there's so much resistance. The bulk of the resistance is probably going to be right here. I think that if we are, because we've been stuck here for so long, I think that if we are able to clear this ceiling, we're going to fly. Even though there's resistance, it's the fact that we've been down here for so long. I think that there's going to be so much pent-up bullish energy that's just going to explode and release if we do end up breaking above this ceiling. So that is my opinion starting to shift a little bit now. And that is because, I mean, this is an unusually long period of time for Bitcoin to be in such a narrow price range. 46 days for Bitcoin to be stuck within a 13% price range. It doesn't happen like that particularly often. Here was another example where we entered something similar. It was 65 days within a 13% range, right? So pretty much exactly the same as what we're dealing with right now. We just went on for another 20 days. So this should kind of put it into perspective for you, right? And the last time that we had this long, the market exploded upwards. So if we're going to do something similar again, then that could be really, really exciting. Obviously, this was clearly accumulation. This could definitely be distribution because we're up at resistance. So I want you guys to keep that in mind, and that's why it's still 25K as the level that makes the most sense for Bitcoin to fall down to. Just in terms of like if we do end up falling, this is where we'd expect it to fall to. This is where the support is, and it's purely because when we collapsed below, we didn't find any support on the way down. When we went up the first time, we didn't really establish any resistance on the way up. So, naturally this gap between 30K and 25K is very shallow, very dangerous, very treacherous, and so that could definitely turn into a play. That's still a short position that I would love to take, and I would take it on BingX and Bybit probably. There's no harm in having 2 trades running side by side. I'd probably look at entering it. The ideal would be if we break down that we come back up, and this is where I would enter if we come back up, but that's not guaranteed. If I wanted a more guaranteed play, I'd probably enter right below this wick. So I'd go short right below this wick, and then I would trade the move down. So that's probably what I'd be looking at. If you guys want me to make a tutorial on BingX to show you how to use it, let me know in the comment section. You shouldn't need it because, to be honest, BingX is exactly the same as all the other exchanges. All the exchanges are built in the same way. Their UI is all the same. They've got all the same layout and all the same tools. So you're really, it's other things that you look for that make an exchange, worth it, like the security or not hassling you with privacy concerns and stuff like that. But that's probably a setup that I'd be interested in taking. And if you want to see a tutorial on how to use it, then just let me know with the link in the description down below. I'm also looking at more exchanges. This is really important for me. I've been with Bybit for a very, very long time, and I absolutely loved it. And like I said, I'm not going anywhere, but it's really important for me to have a bunch of options. So I'm going to highlight a few others to you that I've been liking in these upcoming videos. But BingX definitely a very, very strong option and worth checking out. Alright guys, I hope you have enjoyed this one. Obviously, the reason I'm talking about this so much is because this does affect many people. Even if you're not, in certain countries around the world, you just don't want to submit your ID. It's completely fair enough. So that's why I'm bringing it up. But obviously, I won't be talking about this too much after the 8th of May because that's when the change will be made. So it's not going to be relevant anymore. But, yeah, thank you all for sticking with me. Thank you for checking this video out. If you have enjoyed it, you know exactly what to do. Hit the like, subscribe, click the bell, all that good stuff. Check out the Forflies daily channel with the top link in the description down below. You already know what to do. And I'll see you all in the next one. Cheers.